For that, let's welcome in Stephanie Link, Hightower Chief Investment Strategist, CNBC contributor, and a pretty good golfer, I'm told.
Not so much.
Good to have you on. Okay, so how do you read the inflation data? And did it change any of your expectations about rates, the Fed, the market, anything?
It didn't change my thoughts. We are making progress, though, Brian, on the numbers, right? I mean, if you look at the core CPI at 4.7% year over year, I mean, that was 6.6% at its peak. So we're certainly making progress. The problem is that rents are still really sticky.
90%
right?
of the CPI was shelter.
Yeah, and it increased month over month to 0.5 from 0.4. So I think the numbers getting to 2% of where the Fed wants us to get to for CPI, we're a long ways off. And then you look at, by the way, you follow energy really close, right? Look at the PPI numbers today, right? And you actually saw an acceleration month over month in the headline number. And that's not even including the 24% gain in energy prices from the June lows. So I think next month, the next couple of months, you're going to see elevated PPI numbers. And then you add in the economy, which is a real bright spot. I mean, nobody thought we were going to see GDP accelerate each quarter this year. Everyone said at the beginning of the year that first quarter was going to be peak in GDP. It wasn't. It was 2% in the first quarter, 2.4 in the second, and the Atlanta Fed GDP now has it at 4.1% in the third. I think that number's going to come down, Brian. It's not going to be 4.
Well, won't the CPI and the PPI and all the other PIs, Magnum, whatever you want to talk about, won't they eventually meet the law of large numbers where they're not going to grow anymore because they've grown so much? And you could say, well, inflation rate is coming down, but it's only because it went so high. Right. And even if it tapers off, that's still troubling. I'm sure you've been to the grocery store lately.
Yes, no, I know. No,
it's not pleasant.
Prices are still high, and you have an economy that's hanging in there, which is going to lead to increased inflation going forward. And so to me, I just don't think the story is over. So you asked about the Fed and my views and that sort of thing. I don't know if they're going to go in September. They probably may pause, right? But it's still on the table. And the point being is, rates are going to remain high for a longer period of time. They're not going to ease anytime soon. They didn't just spend a year and a half trying to get this under control, and they don't even have it under control, only to turn around and ease. And so, by the way, I mean, you look at another bright spot. Not only is the economy doing well, it's leading to decent earnings. You highlighted that at the top, that 80% of companies are beating, and the market's broadening. So that's what's different in the last couple of weeks. That's encouraging.
Okay,
that to me is very encouraging.
A big part of inflation is obviously wage gains, and we, being capitalists, want everyone to make as much money as she or he deserves.
Absolutely.
Good for them.
Yep.
But they will go toward inflation. Example, and a stock you like, and we were talking about it before the show, UPS. Big new deal with the Teamsters Union. A UPS driver with some tenure will make $170,000 a year with benefits. Good for them. By the way, I love my UPS driver. Every time he shows up, something cool comes to my house.
And that's because the economy is doing well.
Yes. And I thought, well, this can't be a stock you like because that's a huge cost increase for UPS, but you do like UPS.
The stock has lagged big time.
Waiting for this.
We were all expecting it. We didn't know what the actual numbers were going to be. The numbers came in. They reset the numbers lower, and now it's out there. So that's fine. It's going to cost them a lot. But in the meantime, they just reported earnings where they had better U.S. package growth because of the economy, right? Better pricing, and they have productivity and efficiency measures underway that I think margins can actually stabilize from here and move higher gradually. And you know, when you have a good top line and better margins, you have positive operating leverage, and it's not getting that credit right now. It's trading about 17 times forward estimates. It's massively underperformed FedEx, almost like 40-50% year to date. And Carol Tomé is the CEO, and I'm not betting against her.
And you take this huge unknown. It's now a known, not a known unknown. Can we bring up, guys, a 1 or 5 or 3 year chart of Home Depot? It's another company you like, and this is an interesting take because I could say, I can make the bear case real easily because at higher rates, but I could also then say, wait a minute, no one's moving. Nobody's moving. We know that. The data is like the worst in 40 years. So guess what? They're just going to stay in their home because of interest rates and fix it up.
Yeah. And in the meantime, new home sales are at the best level since March of last year. So you have a little bit of that kicker, too. But this company is doing a great job increasing market share. They, too, have productivity and efficiency things underway. They're doing a great job in terms of execution, great management team. And I like some of the initiatives like e-commerce and Pro, and they're going to fix the supply chain. That had been a big problem for them. So I like this one. It's a little risky because they report earnings next week, right? But so what? I'll buy more if the stock is weak because all these things that I just
said.
The
numbers aren't as good as you think. Although
Absolutely.
80% of companies always beat earnings because
I know.
If you've got a good CFO, they.
I know. That's right.
Here's the number we need to get to.
That's right.
Wink. I'm winking.
That's right. But these are, look, this is what I do. I try to buy best in class on sale, right? Home Depot, #1 in the industry. UPS, #1 in the industry. Both stocks have lagged year to date. They've had issues, but I think, given their track record, that they will fix them, and then you'll get kind of the herd to then understand the quality and what you get. So I like both of these names, and yeah, I mean, I have a little extra cash around earnings season on purpose for this very reason.